Hello my viewer, welcome back to the House of Points, because this is where we say it as it is. And guess what? We are saying that we are going to increase or to change our financial habits. This is where you are supposed to be. Please grab a seat, get a drink, and let's go. If you're in Kenya and you're looking for where you can put your money, you've probably come across Ziidi and money market funds. At first glance, they may seem similar because they are both accessible and designed to help you grow your money. But in reality, they serve very different purposes. Understanding the difference between the two can help you avoid costly mistakes and make smarter financial decisions. Let me start with Ziidi. So Ziidi MMF is a money market fund that is designed for stability and capital preservation. It invests in low risk instruments such as the treasury bills, the fixed deposits, and the government securities. This means your money grows steadily through interests with minimal fluctuations. On the other hand, the Ziidi Trader is a platform that allows you to buy and sell shares and bonds listed in the Nairobi Security Exchange. This introduces you to the world of equities, where the prices move daily based on the market forces. All right, the returns comes from both capital appreciation and the dividends. The difference between these two options, it is actually the risk. Money market funds are considered low risk investments, making them ideal for conservative investors or anyone who wants to protect their capital while earning modest returns. Ziidi Trader, however, comes with higher risks because stock prices can rise and fall unpredictably. This also means higher potential returns, but it requires patience, discipline, and a good understanding of market behavior. Another key distinction is volatility. With a money market fund, your investment value remains relatively stable and you won't experience sudden drops in value. In contrast, the Ziidi Trader exposes you to the market volatility. Prices of stocks listed on the Nairobi Stock Exchange can fluctuate daily due to the economical news, the company performance, or the investor sentiment. This makes it more suitable for investors who are comfortable with short-term uncertainty in pursuit of the long-term gains. When it comes to the returns, the money market fund generates income through interest. Are we together to that point? This is predictable and consistent over time. The Ziidi Trader, however, offers the returns into two main ways. The capital gain, which occurs when you sell a stock at a higher price than you bought it, and dividends, with the periodic payments made by profitable companies to their shareholders. While these two returns can be significantly higher than those of the MMFs, they are not guaranteed. So, who should actually consider using this Ziidi Trader? Let me explain it to you. This platform is best suitable for long-term investors who are willing to ride out the market ups and downs. It's ideal for individuals who understand that investing in stocks is not about quick money, but it's about building wealth over time. It also suits investors who are interested in earning dividends income and younger individuals who are just starting their investment journey and can afford to take more risk. Have you gotten that? However, the Ziidi Trader is not for everyone. If you're saving for emergencies, short-term goals, or simply prefer peace of mind over high rates, then a money market fund is a better option for you. Risk-averse investors may find the fluctuations in the stock market stressful and end up even making emotional decisions that hurt their returns. So please know where you belong. It's also important to understand the risks involved before using the Ziidi Trader. Market volatility can lead to losses, especially in the short term. There is also the execution risk, where poor timing and decision making can affect your returns. Behavioral overtrading is another common issue, where investors buy and sell too frequently, all right? Often driven by emotions rather than strategy. Please have strategies. Additionally, concentrating your money in a few stocks or failing to diversify can increase your exposure to risk. Even though Ziidi Trader integrated into M-Pesa, it's important to remember that convenience does not eliminate investment risk. Please hit on that subscription button as we continue. Now, despite these risks, Ziidi Trader represents a major step forward for Kenya's financial landscape by being integrated into M-Pesa by Safaricom, which is convenient, isn't it? It significantly lowers the barriers to entry into investing. So it means that millions of Kenyans who previously had no access to the stock market can now participate in the Nairobi Security Exchange with ease. This has the potential to increase the retail participation, improve market liquidity, and expand financial inclusion across the country. That is good news to me, isn't it? However, access alone is not enough. Financial literacy will play a crucial role in determining whether investors succeed or they fail. Just because it's easy to invest doesn't mean it's easy to make money, all right? Yes, investors need to take time to understand how market works. Learn the basic investment principles, all right, and develop a long-term strategy. In conclusion, Ziidi Trader is one of the most exciting developments in Kenya's investment space in recent years. It simplifies access to capital markets. It removes traditional barriers and opens up opportunities for wealth creation. It does not remove risk. The smartest approach now is to start small, all right? Learn consistency, diversify your investments, and focus on long-term growth. Whether you choose Ziidi Trader or you either choose the money market fund ultimately depends on your financial goals, risk tolerance, and investment horizon. So that has been my time. Ensure to hit on that subscription button for more financial information like this. That was my time. Until next time, bye.